Good morning, traders. This is Chris Butts with Traders Profit Compass. It's Friday, August 7th, and this is your pre-market look. Before we dive into the charts, I want to mention a couple things. As far as markets are related, we've got the big July payrolls report that breaks at 8:30. That could be a market moving event, so we kind of need to be ready for whatever the market throws at us. That'll be pre-market, and there'll be an hour for price to settle down. We are down on futures, but off the lows, so we want to look at just make sure we know our downside support levels should things get soggy on this Friday afternoon. And that's another thing. August is off to a great start as far as the markets go. We're at all-time highs in the Qs. The small caps have been doing a lot better, and SPY is knocking on the door of the March highs, the all-time highs. So things are off to a great start in August, but I want to remind people that August typically is not a super great month for equities. It's that end of summer thing. Although people aren't on vacation like they normally would with the COVID and all that, they're really not engaged in the market like they would be, say, after Labor Day and into the fall. So low liquidity, market can jump around a lot. All I'm saying is don't fall asleep, and I don't think it's time for pedal to the metal. There were some disaster earnings last night. Datadog was one. It was way down. Of course, the dipsters are always right there and pop it back up. But, seeing some 20-25% drops on a regular basis here in earnings. So that's one reason I don't hold them but through earnings. But those are good trading opportunities, in the morning. If you look at your gap list, sometimes you can get a sense that the dipsters are going to rush in, and you can buy a morning opening low or a pre-market low and then let them bid it up. But that's all active trader stuff. I don't really do much of that. But anyways, also got a nice compliment from Corey, who's part of our group, thanking me for finding these levels, and apparently turned out real well for him. And I always appreciate getting that feedback. I do my best to give you good lines to shoot against, and kind of set the table for you guys to simply focus on executing. That's the one thing I can't do for you. I can tell you the levels, I can tell you what I think, but at the moment of execution, when price breaks out above a level, you got to be there to pull the trigger and trust price. And if you do that, I think your trading will improve and you'll get good results. So continue to lean on the levels. Everybody makes mistakes, but mostly I think they're pretty good. So use that as a guide, and I'm glad it helped Corey, and I really appreciate him giving me a shout out. So this morning I'm going to go over the indexes, but I'm going to give you a different look, and then I want to just run through FAAMG real quick. This is the 4-hour look of SPY. You can see we've been in a nice steady uptrend since near the lows. We were working on the high side of this channel for a while, then we dropped down to the next level, forming the lower channel line. And whenever you've got a channel like this, you can always drop in a midpoint, and you can see that you know, price tends to either work on one side or drop down to the other. You know, if we were to pop up here, I would expect, you know, action up in the top half of this channel. But right here, we're hugging the lows. And that's all relative. I mean, it's the low of the channel, but we're at the highs of price. So that's nothing to be, you know, particularly worried about. The thing to be concerned about is if we drop out of the channel. You know, I mean, that could be today or in, you know, 6 months from now. We don't know. But, you know, dropping back down below 325 into this 319 area. And I think 314 is a really important level because you can see that there's been a lot of trading above that. I think if we were to drop down below and start seeing closes below 314, I think you're going to come back in this 300 original, you know, triple original breakout level from 300. And I think we would spend some time in there before deciding the next move. So you can replicate this chart and you've got the levels here. You know, I'll keep you posted on them. But I think that's a nice summary of where we're at on a longer time frame. Driving down to the lower levels, this is the 30-minute chart. You can see we've got this rising wedge. We had our high yesterday. Here's our prior all-time high. And here's an approximate target based on some of the flags that we've previously identified and discussed. So here we are inside this wedge. This morning, we are, you know, trading like right in this area, this 333, 332.50 area. So we're, you know, below the wedge. Our prior high was at this 332.40. I think if you bought, you know, the breakout and you're still holding it, I think you can hold it against this 332.40. If you're not in and we come back to this 332.40, I think you can buy it with a tight stop below. If we drop below 332.40, we're going to come back and test this gap again. And if we were to break below that 330, then that 331.23, then we're going to come back and fill this gap. So those are the key levels. Just remember your boxes. Once you break back into a prior box, the target's the bottom, and then that's your support. And then if you move to the next level, if you break into the gap, the target is the bottom of the gap. And that's where you would look for it to hold. And you just move level to level as you go, letting price lead the way. Looking at the Qs, 4-hour chart, really nice channel. I mean, going all the way up. It's respected these channel support and resistance. Here we are at all-time highs. I really don't want to see price drop below 270. That was the original breakout level. If it does, then we're going to come back to test the low side of the channel, and anything below that 263, probably going to come back into this 252 area. And that's really a key level to watch. You know, I mean, that's a long ways from here. That's 20 points. You got to remember the scaling, but I really want to see 270 hold to keep things really positive. If it doesn't, we'll adjust, but those are the levels on the 4-hour. On a 30-minute chart, basically a zoomed in view of the same thing. Here's our high from yesterday. 271.50 was our breakout level, and we went straight up. If we were to break above that today, you can buy the high. If we break below this trend line, we're probably going to come back and test this 271.50. And if you're an active trader, I think you can buy that with a tight stop and look for a bounce back up. If it doesn't hold, we're coming back to 270. And if 270 doesn't hold, we're coming back to test this gap. And like we said just a minute ago, if this gap support fails, then we're back here to roughly 266. So that's quite a bit of travel. I mean, if things started rolling downhill and these levels start breaking, then obviously if you're long, you want to cover that on a break of this trend line coming back here. And if you are of the mindset that we're going lower and you get that first break, you can get short at any one of these levels, or if you're already short, you can add down into the move and then look to cover at specific levels where support resides. So that's one way to manage it. IWM, I went back. It wasn't clear on the other time frames where support and resistance were. I went back. We've got a clear line here at 155 where a lot of trades took place last year. So that's first resistance, and that's our target. We're just a little shy of it now. But if we pop that, 160, 161 would be the next upside target. If we were to drop back below 150, then we're coming back to 145. So that would be a place where I would be looking to get short if price were not able to hold 150. And we'll see that on the 30-minute chart in a minute. I wanted to show you here this value band between 150 and 136. You can see all the trades that have taken place. And so if we were to come back down, all into here, that would be a key level to hold, that 136, because you can see below there, things really start to fall away, and we'd probably be on the downside of a new leg down. So 150 is definitely a place to pay attention to, and we see that here. We got the nice breakout from 150. We gapped higher, and then we moved higher yesterday, and then we spent a day consolidating here near the recent highs. Here's our target of 155. If things are soggy today, probably just let it go. But if you were aggressive and you saw something developing, I think you can buy this 153 area against both the trend line and this shelf of support and look for a move back to 155. But if 153 breaks and this trend line breaks, we're going to come back and test this gap at 152, see if it fills the 151, then see if it holds, or we're coming back to retest this 150 line. And that would be a great dip location, because if it doesn't hold there, then you're looking short. So, that's the way I look at 150. It's a really important level for both the bulls and the bears. So, really $1 increments on IWM right through support, the gap, and then key support at 150. Facebook, got a couple messages from guys that caught this. I mean, really good. Whether you got it here at 249 or 256, it's just a matter of how big your win was. But right now, hey, we're out in no man's land. We're, at all-time high. There's no real resistance above. If they bring it back, the location you want to look for first support is this 256. And I think that has to be a place where you at least try along, unless things look like it's really falling apart out there, because that's your support. And if that doesn't hold, then it's back here to 249. So these levels certainly remain valid. And hey, if they take it above 266.60, buy it. Who knows where it might go. And the indicators still look strong. So watch these levels on Facebook. Same thing with Apple. If you caught this breakout here at 443, you got $12 real quick. Again, if they come back, here's your levels of support on the way back down. They're all still valid, and they'll all help you navigate a trade. But here's your first support at 443. Amazon up to the top of the box. If we break out 333, 3,335, 3335 right here. Sorry about that. That's your first target on a breakout. If we come back, I think this 3,200 level is a good reference level to either hold, and if it doesn't, bottom of the box. And if we break the bottom of the box, we've got 3,100 as a target, and then 3,052 on a complete gap fill target. So for this morning, 3,247 and 3,200 are your first tradable levels. Moving on to Microsoft, had a real strong closing bar. Anybody that's long can stay long against 215 and look for a measured move target of 219. If you're not in and price pulls into 215 and the market looks like it's stabilized, I think you can buy it. If things are soft and price loses 215, then we will probably come back to test this 211. And then we still got this big $6 open gap below. And lastly, Google is right here at the gap entry. It's either going to make its way into the gap today and start working on a gap fill higher to 1538, or it'll get rejected. And then if it drops below 1490, I would suspect it comes back to test this 1465. So those are your levels this morning to watch: 1505, 1490, and 1465. So July jobs number in an hour at 7:30 right here as I close the video. See if that is market positive or market negative. Don't get married to any positions. It's August. Stay nimble. There's no reason to lean to the bearish side yet. Things are still bullish. We'll handle any corrective action that we need to, and if we need to turn bearish, we can do that on a dime. But right now, I think the odds still favor higher prices. I think SPY at least has to go up and touch that prior high. Then we can decide. But if SPY breaks above and makes a new all-time high, we're going to have a huge level shoot against going forward. Because once price breaks out to a new all-time high, it should not come back. It should be gone. But I wouldn't be surprised if it took us a little while to consolidate below that level, build some energy, and then pop it. Maybe, if we get the COVID relief package and it's $3 trillion and whatever, maybe that'll be a giant market positive that just pops it over the all-time high, and then we can go from there. But we should expect a little chop, backing and filling. It's been a fast run up, so let's not let that knock us off kilter. Okay, if you like the video, I'd appreciate a thumbs up and certainly subscribe. I'll do my best to send you some relevant, timely content right to your inbox. Over in the show notes are places where you can register at tradersprofitcompass.com to get my content. Please check out the blog. There's tons of information helpful to aspiring traders at all levels. Other than that, thank you for your time this morning. I hope you have a good trading day. This has been Chris Buss with Traders Profit Compass. Enjoy the trading day and the rest of your weekend. Thank you.